All right, so let's go ahead. I'm going to go ahead and share my screen here, and we're going to go ahead and get into it. Awesome. All right, so today's session, it is new professionally owned and operated homes. Before we get any further, let's go ahead and do a quick introduction. My name is Tom Schneider. I'm the Director of Investor Education, and I'm here with Chris Willard. A quick bio on myself. I previously served as the Director of Operations here at Roofstock. I'm the Director of Investor Education now. I also served as the Senior Director of Product at one of those single-family REITs, a company called Waypoint Homes that is now part of Invitation Homes. I am also an active real estate investor with a buy and hold strategy in the Midwest as well as the Southeast, and I am a California broker. And I am joined today by the talented Chris Willard.
Thanks, Tom. And I hold the role of head of sourcing at Roofstock, so oversee a lot of the inventory sourcing through our platform, both on the individual properties as well as the larger portfolio transactions that you may see. I've got over 12 years of real estate experience, and as Tom mentioned, we had worked in a previous life at Waypoint Homes, one of these professionally owned and operated companies. I'm also an active, real estate investor. About 7 or 8 years ago, had the opportunity to leverage what I had learned in my professional, career and start investing, and really enjoy, continuing to grow my portfolios. Tom, I know you do too.
All right, so the agenda today, we're going to touch super quickly on about Roofstock, and then Chris is going to lead the discussion about professionally owned and operated homes. So I already saw a question exactly, what is this webinar about? What does that mean? So Chris is going to dig into that. He's going to talk about how it works, and then we're going to go into some of the markets that we are opening with, as well as a quick high level how to use the marketplace to find these specific properties, and then jumping into some Q&A. So let's go ahead and get right into it. So real quickly on about Roofstock. Go ahead, Chris.
Yeah, so about Roofstock and all of you, it looks like you've been on the marketplace, so you have a general understanding of what we are doing here at Roofstock. But we're really hands-off investing. Really you invest and we do the rest. We're providing an end-to-end solution, from upfront asset identification, underwriting, diligence, and then provide the transaction management, property management, and asset management services, throughout the platform. So really the goal is very simple, and it's to make real estate investing stock market simple.
Yeah. All right, let's jump into this.
Yeah, and just to kind of touch on, one of the questions is what are we talking about today? And it's a very good point. And, we did an initial launch, some of you may know, of Roofstock Reserve, which had confirmed there's a pretty large investor appetite for higher end homes from professional operators like Roofstock. This is not Roofstock Reserve. The biggest difference here is that Reserve, those properties are owned and operated by Roofstock and our property management company. Really, to satisfy that demand, we realized that we didn't have enough supply that Roofstock owned. So we're launching this offering of professionally owned and operated homes, which are very similar to the homes that we own and operate in many ways, but from additional institutional SFR, single family rental operators that we believe have chosen to manage these homes in a high standard that leads to strong investment potential over the lifetime of that investment.
Yeah, I think at a high level, it's showcasing another type of seller we have with these professionally owned and operated homes.
Yeah, and what you're really going to see here with this program is again, we've touched on it, but these are professionally renovated and maintained homes. So there's really a high degree of focus on long-term asset preservation. I think you're going to see properties in markets that may be a little bit more appreciation focused than cash flow focused. And what you're gonna receive with these properties is a home warranty, included with your offer, as well as always, the Roofstock, leading, industry leading Roofstock guarantee, both the 30-day money back guarantee as well as the rent guarantee on vacant homes. So we're excited to be offering those as part of this program.
Yeah, it's just a good way to think about it. I think it's a good, more kind of risk-averse strategy with getting that home warranty, and knowing that the property you're buying is from kind of a larger, professionally renovated and managed property.
And really, I just touched on this, but it's that long-term mentality. Really focus on the long-term asset preservation. And Tom, we did this when we were, working with these professional operators, but we always erred on the side of maybe replacing major systems as a good example, roofs, HVACs, because we knew if we replaced them up front, one, that would set ourselves up for lower repairs and maintenance and capital expenditures over the lifetime of, the hold of that asset. What it would also do is it have the adverse effect of creating a positive experience for that resident. Less things breaking, less leaks, things like that. And so it all goes into the mentality of these professional operators and what they're considering, when they're managing these properties.
Yeah, it was fun working with Chris at one of these companies, and they were extremely data driven. I think we might have had this. This might be another slide, but we would have statisticians thinking about the repair and replace question, and very often it's a little more cost effective to replace. So basically, what I'm getting at is in this slide, the language long-term mentality is the way the decisions that were made in managing these homes before they're available to you guys to buy them is the owners have a very much a long-term. It's not a short-term thought process on making those decisions about repair and replace and those important decisions.
Yeah, and kind of to that point, the next slide here, just like Roofstock is very data driven. We've got a data science team and use AI and machine learning similar to these professional operators. And they look at things through a very similar lens. They're very specific on neighborhoods and even some even selections within a neighborhood. Is it in the beginning of the neighborhood where it's a little bit more high traffic? Is it in the back of the neighborhood, a cul-de-sac, et cetera, and so forth, next to certain amenities like parks and whatnot? So all of that goes into the asset identification and of these professional operators, and you'll start to see that in some of the homes that are being offered. And you'll start to understand why they may have acquired these. So let's get into really how this works. And so initially, the homes, much like the Roofstock Select program, representation, you're going to have a buyer. As a buyer, you're going to be represented by a Roofstock affiliated broker. It's going to be a local broker, a real estate agent in that market. They're going to help you negotiate as well the contract as well as close on the purchase. Again, this is complimentary. This is all done through our platform. So when you go on and you find a property that you'd like, you go ahead and make the offer, and then that broker is going to be handling a lot of the process and the paperwork for you, and communicating you as the inspection reports come back. Touching base on the inspection contingency, these homes are listed on Roofstock without an upfront inspection, so a slight variation to some of the certified properties that you see today. But they're going to come with an inspection contingency, so you're going to have the comfort and understanding and knowledge that you're going to understand what you're getting into before you're closing on that property. And so again, that broker is going to help facilitate those inspections and be able to be there as a sounding board and answer any questions that you might have throughout the process.
Yeah, and there's value to, well, it's nice to have that inspection before you submit your offer. It's nice having it in the transaction because you have an inspection contingency when it comes back. If for whatever reason, it doesn't pass the muster, you can get out of that transaction with that inspection contingency. But, for the reasons we talked about before with these professional owned and managed houses, they tend to be held to a higher standard with some of the construction and even some of the tenant placement related stuff. There is just I'd say a much more risk averse owner when buying one of these properties from one of these sellers.
And then the other way is really the which you're probably all used to is the Roofstock exclusive, where representation, we are representing the seller in the transaction. These properties have gone all through the Roofstock certification. You're going to have that upfront inspection report with the title search. You're going to have the tenant payment history for all the occupied and leased properties and all of those documents and data will be available to you to review ahead of submitting your offer. For inspection reports that may be considered a little bit dated, if they've expired past that 4-month window, then you will have the ability to ask for an inspection contingency and get an updated inspection report during escrow to just verify everything, as Tom puts it, cuts mustard.
All right, let's talk a little bit about some of the markets where this program is available. And these are really big, heavy hitter markets. When choosing markets, they're cities where have a really dynamic economy, a big population, just a lot of tailwinds with them. And these are where these professionally investors are buying these houses, so that's where they're going to be selling them. A couple of different points we'll make on a couple of these. I think we're going to touch a little bit on population and then some economy and then some kind of fun tidbits. So Atlanta is one of my favorite markets. That's what the majority of my investments are in. It's the 4th fastest growing metro area, adding 75,000 residents in 2018, a super dynamic economy. I think they have the world's largest or busiest airport too. So a rapidly growing economy. The GDP is 385 billion. It's just crazy to think about that. And a top 10 US economy. And really just a hub for a lot of businesses. It's a huge market, Atlanta, Georgia.
And Tom, just to add, I mean, it's probably one of the largest single family rental markets as well from a professionally owned and operated, point of view. It's one of those markets that a lot of people gravitated towards, I think, probably earlier on. But we've seen, especially, as recent, that there's definitely an appreciation factor that there today, especially with all the job growth as you were talking about.
Yeah, and one other tidbit that I like about Atlanta a lot is there are costs that you pay as an owner with insurance. And one thing that's great about Atlanta versus other coastal cities is it's pretty tame with regards to weather and all of that stuff. So your insurance costs are going to be much cheaper in Atlanta than they're going to be in Florida along the coast or at other places. The other aspect is unlike some cities that don't collect income tax, the rental property tax is relatively very low. There are some states that do not have income tax, and where that's the case, their property taxes are super high. Georgia is not one of those. So Georgia does have an income tax, so their property taxes are relatively pretty darn low. So low insurance costs as well as low property tax costs. Great thing. So next we have Austin, Texas, and it's just such a tech hub. I can think like offhand, I think I've had like 4 groups of friends move to Austin for work that were living here in the Bay Area. So huge growth on the tech side, on the business side. It's a massively growing population, home to the University of Texas. Some of the suburbs around it are growing very quickly. A strategy I like in picking markets is picking some of these booming ones and kind of just like right on. Think about it, if you were commuting to that market, like how far would you want to live away? So like, having a Google map to the center of it and then just measure out like, oh, I'd be okay with a 30-minute commute to work. And like, that's a good way to circle around anyways. Austin, a fantastic market, fun place to visit too. I'd recommend going. Chris, do you have any Austin thoughts?
No, I mean, just to reiterate, I mean, I think the growing trend here in the Bay Area and maybe really all up and down the West Coast is that people just moving to Texas, and Austin just is one of those landing zones that just keeps popping up in conversations. So yeah, there's a lot of migration happening that direction, and I think some might say that yeah, they've seen that appreciation over the last couple of years, but I think with all the points that you've touched on and this really becoming the next tech hub. I think there's a lot to be said about investing in the market today.
For sure, I'm excited to see this. We've been talking about opening up Austin for a while, so it's awesome to finally see Austin here. All right, Dallas, Texas is another massive opportunity of a market. It actually led the U.S. in job growth in 2018, beating out New York as well as Houston. Between 2017 and 2018, adding 132,000 new residents. And this is a market where the suburbs, as I was talking about before, if you draw that ring around, the suburbs are growing really quickly. And there's a lot of great operators in Dallas. So we've seen lots of awesome rent growth in Dallas too. So keeping that healthy balance between the rent and the price, but really another massive market.
Yeah, and one quick point just to touch on here. I was talking with somebody the other day, and that local realtor out there, and they were saying, yeah, Dallas, we're seeing double-digit appreciation kind of year over year, and continuing to see that. So just given all the job growth and everyone migrating to Dallas as one of those, another one of those landing spots in Texas, it just continues to bode well for the economy and housing market.
I keep sneaking ahead and looking at some of the questions. I want to get to them now, but I'm gonna wait. I'm gonna wait till Q&A. All right, Houston, Texas, another massive market, huge job growth, hugely growing population. The single family rentals rose 27%. The rental amount between 2018 and 2019. Another kind of dynamic economy that is just exploding and exploded over the last several years. So
yeah, and we have a portfolio that we manage there, and continue to acquire on behalf of a few clients with our platform services. And it's we love the market. We see long term appreciation and long term gains, and a lot of positivity coming out of Houston.
Yeah. All right, and finally, the other part of Texas, San Antonio. So San Antonio is sneaky big. 2.5 million people living in the metro area. It has a really diverse economy touching on tech, cybersecurity, life science and healthcare, aerospace and aviation, military, financial services, and on. So as an investor looking for a market with a lot of people and with a really dynamic economy, San Antonio is an awesome fit. And talking about some of the other markets where they've seen a lot of rent growth, San Antonio has seen quite a bit of rent growth as well, an average of 2% according to Rent Cafe, which is if you guys aren't familiar with Yardi, it's a property management system that pretty much all the major publicly traded REITs use. So they really have their finger on the pulse of rent growth and all that kind of stuff. So another fantastic market.
And Tom, just something to add real quick to San Antonio, as you were talking about, in Austin and some of these, smaller submarkets, outside of a major city. I look at San Antonio as one of those markets, within the state of Texas. And, people talk about Houston, Dallas, and Austin, but, up until recently, there wasn't a lot of talk about San Antonio. And so it's one of those markets I still think that there's, tremendous growth to be had. We started seeing it from a professionally operated point of view, and more groups starting to look at that, over the last year or so. And I think that's going to be a continued trend.
Yeah. Awesome. So let's go ahead and jump into talking about how to find these properties. So we've been talking about these professionally owned and operated properties, and we have created a filter right on the Roofstock homepage where you can find these properties. So if you go to www.roofstock.com, go to buy, you're going to see the property list page. And within the top of this, as you can see within my screen, we have these filters. And what you do to find these properties, if you expand to more, and on the bottom left-hand corner, you can click Roofstock Select. And those Roofstock Select are these professionally owned and operated homes. And I think we're gonna have a little bit of time. I can demo once we get through this presentation. I can go on the website if we have time, which I think we will have time. So there's now a lot of other cool filters you can use, but specifically for this presentation, we have the Roofstock Select filter. All right, going into looking at one of these specific properties, we have a property here. It's on the higher end in Dallas, Georgia, which is just on the outskirts of Atlanta, right in that sweet spot of, would you commute into this area? And we have a property here. Some key features of the property card that we have is adjusting the purchase price right here. As you adjust this, all these financials are going to update accordingly. We default to have the down payment at 100%, which is all cash. So to adjust that, you would just slide the sliders. And again, all these financials are going to update dynamically. Within this property, we have this is the review the bid. So at the point at which you're ready to submit your offer, you can click review bid, and that will take you through the offer flow. And again, these are a select property. So just as Chris touched on within talking about how it works, this would allow you to create your offer and be connected with that local broker who'll be representing you for these select properties.
And what I really like about this one, Tom, I'll just jump in. Sorry to interrupt you, but
please.
I'm jumping in here. So the neighborhood score, I mean, and I think what you're going to see is a lot of these are going to be those higher end, neighborhoods and the better neighborhood scores and associated with higher schools and school scores. And this is a 4.5-star neighborhood. So really I can see on the map, see Marietta kind of pointing out from the right there from the east. So this is going to be a little bit northwest of downtown Atlanta, but a really good, a good affluent area, stable. And one thing to point out, I think, is going to be a common theme with a lot of these homes is as you look at kind of market rent for the area, and then you start looking at some of these homes that are maybe a little bit more improved and better maintained. I think that's where you also have some of the upside to be able to push the rent a little bit. And we look at the range here of the high end of the range almost being $1,775. There's probably some room in there to be able to push this rent a little bit and given the location, given the quality of the asset, you're probably going to be able to achieve a little bit higher rent than maybe what the market might state.
I was doing something I'm involved with is helping with Lead Roofstock Academy, which is our coaching program. Go check it out. It's really cool. Anyways, we were talking about buying strategies, and this property is a great example of someone who would be more risk averse and just looking for like a quote unquote safer property. And the reason I say that is you can look at these other features. We have this neighborhood, and a 4.5 star out of 5 is a very nice neighborhood. The schools are all very good school scores, 6, 7, and 6, and that's elementary school, middle school, high school. So this is a good profile of a home you're looking where you don't need a lot of immediate high cash flow, but you're looking for a property to get maybe a little bit of cash flow, but much more upside on the appreciation, much more upside on limiting vacancy amount. Northeast Atlanta is just a very, very nice area. All right. Any other aspects of the property page, Chris?
Just one thing in general, I think, a lot of these properties and like specific to neighborhood scores and the correlation with school scores, as you start getting into a better school districts, you're going to start to attract that, that higher quality of resident, maybe potentially families that want their kids going to better school districts. Tom and I both have, a young daughter and son, and we've already been thinking about that and trying to plan ahead and trying to get into the right school districts, right? And so those are thoughts that and conversations that are happening even with the residents. And so being able to have what does that mean for me as an investor, and how does that directly relate to stability? I think as you start to get folks that are getting into these better schools and targeting some of these nicer areas, that creates more stability, less turnover, longer durations and tenancy. And across the industry, I believe we're seeing somewhere around 2.5 to 3 years on average. And I think as you start to gravitate towards some of these nicer areas and pockets, you probably start to see that even grow further into 4 or 5 plus years.
Yeah. 3-bed, 3-bath, built in 98. All right, so we have another example of a property here. Chris, do you want to lead walking through this property?
Yeah, so this is one in San Antonio, and we touched on the market earlier. This one is, if you think about San Antonio, this one's currently being offered up at a hair under a 5 cap rate. I think for that market, that's pretty strong. That looks like there might be some upside there when you look at the rent range as well. But again, as we're looking at the neighborhood score, it's a strong neighborhood. It's a 4 out of 5 star neighborhood, so it's going to be above average. It's got really good. I think it's got good curb appeal. It's got a nice long front yard. The house is set back. You've got a 2-car garage. The other thing that you think about this when you start getting into investing is, what are my exit strategies? And I think as you start to get into these better areas, better school districts, you start to have multiple different exit strategies when you do go to eventually sell your portfolio. That's always something I consider. when I'm investing, is what is my potential exit, and I love to be able to divest my risk there and give myself some optionality. But again, I mean, 4 bedrooms, 2 bathrooms, almost 1,700 square feet. That's going to attract a family that maybe a little bit more of a sticky tenant with more stability, especially with the focus on better schools.
Yeah, four-star neighborhood, San Antonio. Yeah, good looking property. All right. All right, so we're going to jump into a little bit of Q&A, and then we might go into a little more demoing, or we can kind of take this direction as y'all see fit. So let's go ahead and jump into some of the Q&A.
And I saw a question earlier that I've been wanting to hit and touch on. Home warranty, is that like American Home Shield? Yes, that's a company that we've used and that we use in a few of our other programs. But yes, it would be through American Home Shield is the home warranty, and really what the home warranty is meant to do is be able to cover the major systems and components of the home, such as a roof. Actually, on one of my rental properties, had the roof recently got damaged, due to hail and wind, and through the home warranty and the insurance, I'm able to utilize my deductible and get the roof replaced, where I'm not having to come out of pocket for the whole cost of the roof. So that's something that we felt was really important to be able to offer with this program.
All right, so we got a question here related to home inspections. So the question is, for the Roofstock Select properties, the inspection in the past was paid for by the buyer. Did that change recently? So the way that works is, if you use one of Roofstock's preferred inspectors, it's still a third-party independent inspector. Roofstock will pay for that within the transaction. You're welcome to use your own inspector if you want to. If you're using your own inspector, you're going to pay for that inspector. So that's the answer on inspections where there is an inspection contingency in the transaction.
Another great question here, given the current state of affairs that we're all kind of dealing with, and pandemics, and how can you be sure about good markets with the pandemic? And something I think really important to kind of stress here is that the single family rental industry as a whole has operated extremely well through this pandemic. I do think that as we started to enter in late March, early April, there was a lot of uncertainty. Are residents going to be paying their rent? Obviously, the government stepped in, and with stimulus, and there are quite a few Americans on unemployment. But what has shown and has proven itself out is that tenants are still focused, residents are still focused on paying their rents. As an industry, we're still seeing, and this is not just professionally owned and operators. This is also, property management companies across the industry. We're seeing high 90s% occupancy. We're even seeing some occupancy growth in some cases, in some markets, even seeing rent growth. Very low collections across the industry in general. And so that really bodes well for the industry, and I think we're going to continue to see that. And at the end of the day, I mean, people need a place to live, right? And so even through a pandemic, and we're seeing just the SFR industry continue to operate very strongly through all this.
A couple of other points to touch on. We don't have a crystal ball, so it's hard to say, but so far to date, it has greatly exceeded expectations on low evictions, on some of the things I think a lot of people thought may have happened. We have a really good podcast episode with John Burns, and our CEO, Gary Beasley. The podcast is The Remote Real Estate Investor. Excellent podcast. Subscribe, like us. But search specifically for the one with John Burns, who is like Case Schiller, like really one of the big thought leaders, and him sitting down with Gary. They're both Stanford graduate school, boo Stanford, I'm a Cal guy, but super smart guys talking about some of the impact of COVID on single family rental. But my 10 cents is, we don't have a crystal ball. So far, it has greatly exceeded it hasn't nearly been as bad. And I think one of the reasons why SFR, I think, is a little bit stronger in this case than potentially multifamily as a risk for that is it's distributed assets. So like if you're in an apartment building, like I think there's a little bit more risk of, if some people aren't paying, like why would you pay if your neighbor's not paying? Where single family is a little bit spread out. Again, that's my kind of like personal thoughts on why SFR is a little bit safer in this kind of environment. But at the end of the day, really, it's about like safety and habitability and us all getting through this. But so far, there has not been the issues that potentially was seen, but we'll see. So the other question is, why are these companies selling the homes? And I'm sure Chris has some excellent points, but I'll make one first before I let him speak to it. Is oftentimes with some of these structures is there's like a time limit. So a company will put a fund together. It'll be 5 years long. It'll be 10 years long, whatever. And then there's just like a period where they empty the fund and sell the houses. Some companies just turn over capital regularly and are regularly buying and selling houses. So there's a variety of reasons. I try not to get caught up too big on trying to be like a psychologist and understand the seller. I think about my buy box. I think about the kind of investment I want to buy and don't overthink the seller's intention. I understand where this question is coming from, not wanting to be on the hook and buying somebody else's stuff that they don't want. But the truth is there's just a lot of buying and selling that happens in any market, and you shouldn't try to think about it that way. I think like, oh, what am I getting? Because there are just reasons for companies are selling. It's not always just trying to, get someone. And Chris, go ahead. I think you probably have some great points in working with a lot of sellers.
Yeah, no, I mean, you made a couple great points there, Tom. I mean, there was, the other thing to take into consideration, could be, management efficiencies, operational efficiencies within the market. There was actually, there was a home listed on our platform last year that, I ended up, being able to buy. It was on the marketplace for quite some time, and it was, in Kansas City, but really outside of Kansas City. And the owner of that home happened to be a professional operator, and the reason they were selling that home was because for them, when you think of windshield time for their maintenance and property management staff to get out to the home, it was a 90-minute plus turnaround time for them. And that just didn't make sense from efficiencies point of view and looking at their margin. So to them, that home, maybe it wasn't necessarily performing, poorly, but they felt they could increase their management efficiencies and operational efficiencies by selling off that home. And I was able to, acquire the home. The home's appreciated quite a lot in value. It's located right next to a fort. So there's a military presence out there, and a lot of the military servicemen and women live within that, those bordering neighborhoods and communities. So I've been able to keep that home leased. I have a local property manager that's specific to that market that really knows the submarket. So I think there's definitely opportunities here to kind of take advantage of some of these homes that they are selling for one reason or another. But just as Tom mentioned, I too try when I've got my acquisition hat on and my investor hat, I try to focus less on, why are they selling, and more around, is this a property that, do I see benefits, to it? Could this add value to my portfolio? What do I like about the property? What do I maybe dislike? Weigh the pros and cons. So I try to focus more about how it can positively or negatively impact me versus, what the other party is thinking about doing.
Somebody asked, what was the name of the podcast again? And that's The Remote Real Estate Investor. And it might be episode like 12 or 13, where we have John Burns and Gary Beasley, our CEO, on. This next question I love is, what exactly is the cash flow? I like this question a lot just because oftentimes within the assumptions that people say returns are, there could be like baked in that there could be different values that people use for repairs and maintenance, for insurance costs, for taxes. So anytime you're looking at a financial return, know what their baseline is and what they're using for R&M, what they're using for insurance. We have all that information. If you click within any of these listings, you can click the estimated, I'll show you the button you click. It is right here with this estimated market right here. If you click, or excuse me, custom, that's what you hit, custom on the rent, and then that will show you all the assumptions that we have going into every single part of the financials. So I digressed a little bit. What exactly is the cash flow? The cash flow is your actual dollars that you are earning annually. So it's including leverage. So if you're using a loan, it's the total money you would be collecting. So if you are using all cash, your cash flow is going to be much higher because you don't have any debt servicing. If you are using a loan, your cash is going to be less because you're paying that. So, but the cash flow is your net amount of money. You're at the end of the day, how much money you are collecting, not accounting for any taxes that you have to. It does account for property taxes, but not account for any other kind of tax implications.
So Tom, I see one question here. Can you demo again how to filter for these properties on the platform? And while you're pulling that up, I'll answer another question. So who handles tenant evictions? Yes. Yeah. In the event of a non-payment, and that's where we've got several different options for property management. You'll work with your property manager to handle and facilitate any and all evictions or tenants with non-payments. What is actually happening, what we're hearing a little bit right now, we were expecting to hear a lot more of it with property managers and residents and tenants, is for those that are having maybe falling on hardship or hard times, getting them on a payment plan. So that does happen at times, and that's where really the property manager would work with you as the owner, as the investor, to come up with a plan that makes the most sense to align with your investment thesis and decisions.
Yeah, kind of related. So what percent do you charge for property management? And so that question leads us to another question: is who are the property managers? So Roofstock is not the property manager. What we do when we open up a new market, we'll go and research the best top 10 or 20 property managers. From there, we'll do phone interviews, and of the best 5 or 6, we'll go and visit the office and look at their sample of their leases, look at the way that their standard operating procedures, and the best ones of the markets, we recommend them as preferred property managers in that region. So I'll get back to that question to what percent is charged, but so we don't do the property management. We identify ones that we think are good, but you are more than welcome, and I encourage everybody to talk to the property managers before you buy, just to verify that you're comfortable with them. Or if you want to self-manage, you can self-manage. But the question, what percent does a property manager charge, I'm going to change that around a little bit, is typically anywhere between 6% and 12%, and it does matter by the market. The property manager is going to make their money on construction. So if there are some repairs that need to be done, they either charge a flat rate or they charge a percentage upcharge. These are great questions that you want to ask. Within Roofstock Academy, we have really thorough interview questions for part of our mastery programs. It's like 2 pages on how you want to grill your property manager before hiring them. So really important to know what those values are before you select a property manager. So yeah, typically, and the other charges they have, what are the charges they have? Leasing fees. So when they lease the property, say it's vacant and they put somebody in it, they'll typically charge anywhere around like a half month's rent. But those are the kind of charges that you'll see for professional property management. And I feel very good. I within my portfolio, I use just third-party property managers. I think Chris probably does as well. And that's funds that I'm very happy to pay someone else to do, so I can focus on the buying and portfolio. Go ahead.
I managed a few myself remotely, and it's it's fun when it's manageable. But when it's no longer manageable, you're really happy to rely on a local property manager who all they're doing is thinking about your property. So something to definitely consider. And while we're on the conversation of fees, a renewal fee, that's another fee that might pop up from a property manager. And this is, I think, different with every property manager, but late fees sometimes, and what's important to understand when talking with your property managers is any late fees. If a tenant were to pay $50 a month for being late, do you get to participate in any of that additional income, or does the property manager take 100% of that? So that is another piece of information that is important to really understand as you're going and selecting property managers. Another question we had here around property management is, who does the property management on these properties, and is the company that currently managing it, willing to stay on? And, in a lot of cases with these professional, owners and operators, is they manage internally for their funds, but when it comes to third-party management, that is just not within their scope of work. However, not all, and that's where it's really important to be able to look at the property detail card and look at the property management options, and we will certainly identify and highlight when there's a management option and they're the current manager and they're willing to stay on. So again, make sure you're looking at the property detail cards on the property detail page for each property.
We'll do the demo real quick. So I'll do the demo and then get to questions. I can keep going on questions because I enjoy them. All right, so I'll demo Tom. So I click buy, and it'll take me to that property list view. Within the list view, within more, there's all of these filters here. But when I click more, I have the options of seeing a bunch of other interesting filters. And for this discussion that we're having today, talking about these professionally managed, I'm going to click list source, expand here, click select, and that's only going to filter to these specific properties. So I can see them here, all 61 of them. And again, I'd say strategy-wise, these are probably a little bit more risk averse, a little bit less on the higher cash flow, more of like getting like a higher appreciation, a little bit less risk around vacancy of those type of properties, which ties really great to this next question. So having a loan or not, I can still earn some cash monthly. And the answer is yes. I'd say for this variety of properties that are a little bit nicer, that cash flow is going to be a little bit thinner, but that's okay. Kind of depending on what your risk threshold and what you're looking for, this is just an excellent flavor within Roofstock of getting a little bit safer, higher appreciation type of an asset.
And I know we've talked about this on previous roof talks, Tom, but I tend to take both a more of a risk averse and more of a riskier approach with my investments. And when I'm looking at more of a risk averse investment, and looking at maybe some higher end homes and more of a stable location or area, I'm okay taking a lower yield because I know that home is probably going to appreciate more over the lifetime of my hold than I may collect in cash flow. So I'm okay making a few dollars or even potentially breaking even if I know that over the next 5, 10, 15 years, I'm really going to make the bulk of my equity in the appreciating market. So that's something to certainly consider as you're looking in some of these homes. I think what you're going to see is you're going to see 3, 4, 5 cap rate properties for the most part, and that kind of speaks to being more a little bit risk averse. And these are in positions in markets where there's a little bit more equity gain potential.
Yeah. A couple of quick questions we got. So are you bulk insuring the properties to reduce insurance costs? That's definitely something you can do. We have some insurance providers. So similar to how we vet local property managers, we have a couple of insurance providers that when we list a insurance quote on a property listing a price, we've already identified an insurer who will bind, I think is the term they use, bind that insurance, that property for that price. So, but just like the property manager, you're welcome to look around and shop for insurance if there's other providers that you want to look at. But we try to do that work ahead of time so you don't necessarily need to. So yes, you definitely can and should do some bulk insurance if you're able to do that through a portfolio. The last thing, or not the last thing, but the next thing I'll show is this custom button where I said you can see all the assumptions right here. And I love this, tweaking with this. So, maybe perhaps the property is already occupied, then I'll remove the leasing fees. Or perhaps I find a property manager that has a slightly better fee. These are all things that I can tweak around with, and it will roll through in the financials. All right, how does Roofstock make money here? That's a good question. So Roofstock
I
makes
was
money.
just looking at that one, Tom.
You go ahead and do it. You're a money guy. Go ahead.
Well, no. Look, I mean, we want to be very transparent. You know, so where the select properties come into play and where does Roofstock make money is, you know, we do have a affiliate local broker. You know, we are representing you as a buyer, and in a real estate transaction, the seller is going to pay, you know, realtor fees, and if there's a seller's agent and a buyer's agent, that's going to come out of the seller side. So we actually get paid, you know, through our representation, but that's being paid by the seller. As a buyer, you know, like our exclusive properties, there's still going to be the marketplace fee that's going to be payable, you know, through the Roofstock platform, but our fee comes out of the seller.
All right. How likely is it will Roofstock help me find the tenants to pay the mortgage? So this again falls into that local property manager role. So when you identify a property, you can choose to either self-manage or find a third-party property manager. And if you do use a third-party property manager, they're going to help you with leasing it. They're going to help you with rent collection. They're going to basically do everything. And you just set up auto pay where they collect the rent and they send that rent over to you, and you don't have to do anything. Now, out of the money of the rent that they're collecting, they're going to pay themselves either the rent fee, the percentage, or depending if they're doing some activity like leasing the house or doing repairs and maintenance, they're going to take that out of the rent and pay themselves. But that's okay. That allows you time to think about scaling your portfolio and all of that good stuff. I like this question, Chris. So if you don't mind asking, like answering this, so is this about REITs selling their houses to individuals or buying into a REIT?
Yeah, it's a great question. And you would be buying these homes outright. So no, you're not going to be investing into the REIT through these properties. You're going to be taking title and you're going to be owning the asset yourself and being able to make the decisions. For those that are interested in investing in REITs, certainly, you know, the public REITs, there's that available, there's that option. I think what we've seen is, you know, if you use a couple of them as an example, you might see a 1%, you know, dividend, whereas, you know, what we're expecting and what we're seeing are, you know, 4, 5, 6 plus, you know, percent, you know, returns on the properties through Roofstock. So, you know, and I think it's a really good point because it's what type, you know, always answering the question, what type of investor am I? Do I want to be a little bit more hands-on? Do I want control of the asset, or do I want it to be completely passive? And if you do want it to be completely passive, and maybe you want to, you know, have an alternative other than a REIT, we also have, you know, our Roofstock One program that is much more of a passive investment. You know, where you know we're I believe estimating, you know, 5+% returns. And so that's certainly another option.
All right, next question. Property taxes are generally higher in Austin, Texas, in Texas in general. Can you please shed some light? So what the state of Texas does to run the government is they don't charge any income taxes. So unlike California, where Krista and I are at, there's these income taxes that the state charges. What Texas does to pay for the state to operate is they make that up within the property taxes. So you're typically going to have significantly higher property taxes because there is no income taxes, and that's just a way that it's the state is structured. So you can expect there to be a little bit higher property taxes in a state like Texas versus a different state, because that's how they operate the city with that money.
Tom, here's a fun one. How many properties do we own? So I think you might own a few more than I do. I currently own 8 properties spread out across the country. I'm actually in the process of selling, you know, one of my homes that I bought a few years ago and saw some really good appreciation. And I'm going to be going into a 1031 exchange and, you know, hoping to be able to come out of that with an additional 2 or 3 homes. So I'm hoping to get to 9 or 10 before the end of the year here.
Yeah, and I've got right around a dozen homes. So, and just trying to add a couple every year, it's fun. And what's cool about real estate investing is it builds on top of itself. So just like Chris was talking about with a 1031 exchange, you know, I think getting started, it can sometimes take a little bit of time to build some momentum because you're putting the full down payment to buy a property. But after a couple of years passes and you're adding new properties all the time, you have that appreciation to tap into. And there's another great episode on the remote real estate investor. We talk about this at length with the Roofstock Academy members who and I'll use this to do a little promotion on it. So Roofstock Academy, you did 10 hours of coaching, or excuse me, 10 sessions of coaching one-on-one with myself and some of the other great coaches. You get Roofstock Marketplace credits. So every time you close a property on Roofstock, you get a $500 check from Roofstock, and the program only costs $1,250. So if you're planning to buy a rental property on Roofstock, it makes total sense. You're actually going to make money while getting these other benefits of Roofstock Academy. I'll throw out a promotion code that we have running through the 4th of July, education. It's $100 off, worth checking it out. You can also send me questions. It's tom@roofstock.com. I got excited talking about Roofstock Academy. But Roofstock Podcast, the Remote Real Estate Investor, has some great content on taking out appreciation. So I remember what we were talking about. Chris was talking about buying houses, and that my follow-up was you can buy houses faster once you start building a portfolio, because you get that appreciation to tap into. Do you have any intentions? Go ahead.
Yeah, I was going after that one. Do we have intentions of listing properties in Southern California? And the answer is yes. We are getting ready to list properties in Southern and Northern California. So, it's going to be on the near-term horizon here. So keep a lookout.
Someone was saying, I like this, the best advice for someone who just bought their first property through Roofstock. Congratulations, if that is you. My recommendation is immediately get on with the property man, like get on the horn and build that relationship with your property manager. I love to use the analogy of trying to explain a robot how to make a peanut butter and jelly sandwich. Like, I would be over explicit, especially if it's a new relationship with the property manager, because this is the person who's going to really help you scale where you don't have to think about it. You want them to have the same mindset of you when they're making decisions around repairs and maintenance and stuff like that. So I would talk to them, set expectations around, okay, property manager, I want you to contact me if the maintenance is above this amount, or if the property's vacant and they're just leasing it. I would talk to them about what their thoughts of tenant screening criteria is. So my advice for the first thing for someone who just bought a house is to get on the phone with your property manager, because that's just going to be such an important partner. Chris, what would your advice be to someone who just bought their first property through Roofstock?
Yeah, again, congratulations. I think you made the biggest jump. And really exciting time, I think, to piggyback on what Tom was saying. I mean, when I'm talking with property managers, I always want to set boundaries when they're sending me bids. If there's any sort of repairs that need to be done, I always like them to collect 2 or 3 bids to make sure that we're providing credibility to that first vendor. And it also gives me, as the owner, optionality and comfort knowing that I'm actually getting the best price. It also helps understanding different timelines and expectations. But you've got a fun road ahead of you. So I urge you to continue to invest. Figure out how you can grow that, buy your second one, and continue to build that portfolio. As you first start out, when I first started out, I bought my first home, and then I sat on it for a couple years. And I didn't make any additional investments, and I wanted to really understand, how the home operated. When everything's going good, it's going good, and there's low vacancy and low repairs, and you're generating a lot of cash flow. And then there's times where you might be dealing with a turn, and there might be some vacancy while you're rehabbing the property and finding a new tenant. And so just understanding, the full life cycle of a property, whether it's occupied or vacant, in those first couple of years, I think is truly important. But then that's going to really give you a lot of confidence going into the next one. And so really, really excited for you. Congratulations again.
There's a question around, organizing. How are you getting your money together in buying these properties? And like I said, once you start building a portfolio, it moves faster. But with those initial acquisitions, I would be really disciplined with your personal fund flow. So, you hear about paying yourself first, so setting up 10% of your check or whatnot. Hustling. You can potentially set up structures where you're buying with friends. There are other strategies such as house hacking, where you buy a duplex, you rent one unit out, and you live in one unit. There are also with that type of a strategy, if you're kind of pretty strapped on cash, but you want to get in the game, you can buy a house as low as 3% down. There are options out there, especially with like house hacking, because you would be an owner occupied. So I would recommend exploring, basically having systems in place to save your money, and also exploring your different options that you have when you live, and just hustling, man. Fortune favors the hustler, people who are working hard.
No, and a good point to that. I mean, it's, you've started investing, and that's the key. I think when I bought my first home, it was 2013. I didn't buy my second one until 2016.
Yeah.
And then the next year, I ended up selling my first one. I was able to buy 4 with that. Then I was able to capitalize on a market appreciation with one of those homes that I acquired, sold that, spun that. And so you can keep just rolling in and out of these, and then you can, potentially refinance. Tom and I were talking about rates before this webinar, and rates are still extremely low. And it's a great time to refinance and pull out some additional equity and be able to reinvest that equity into generating additional cash flow with other investment properties. So those are different strategies that help you as you get the ball rolling, keep the momentum going, continue to build the portfolio.
And the last couple of questions. Does the property manager typically help with large repairs? Yes, like repairs. Well, I suppose it kind of depends on the property manager, but that could be part of the vetting process. Will you help with bigger structural? A good property manager will get multiple bids and will help you with that. As a remote investor, and my skill set isn't particularly like a construction expert, I'll buy properties that are in a little bit better shape. Like this kind of inventory that we're showing here is in good shape, and you don't have to be concerned about needing to put in a bunch of construction work, but your PM will be able to help you with that.
And there's another question here. How do you have unlimited funds to buy your properties? And just to reiterate the point, you keep the nest egg for any reserve for any major repairs, but as you're generating cash flow off these properties, you continue to save that cash flow. It builds up over time, and then you can start to really just build your portfolio based on cash flow. You start to think about your initial seed investment into the portfolio, and you're really not adding anything additional, any outside funds, any third-party funds, as I consider it. With my own personal portfolio, I'm only investing cash flow and profits that are being generated from my income, and or selling a property or refinancing and pulling equity out. So once you get it to a certain level, you can just continue to recycle the capital that's coming off of it.
Reinvesting dividends. Excellent. All right, guys. Well, I think that's 5 o'clock. I want to respect everybody's time. Really appreciate you guys jumping on with us. And I guess my last thing is I love Chris's point where, you're getting one property. You don't have to buy 10 right away. Like you get your first one in the door, like it's going to advance you as an investor pretty far. So having a bias for action is a great mantra to have. Any final thoughts, Chris?
No, just happy, as we always end these, right, Tom? Happy investing.
Happy investing. Perfect. All right, thanks, guys. And we'll take a look at some of the questions. There was a couple of them we didn't answer, but we'll look to them and get them out in the email correspondence. So, all right, thanks. Happy investing.